Stop scrolling for 1 second, because if you get a Social Security check, this next few minutes is worth more than almost anything else you'll watch today. There are 3 separate rule changes touching seniors right now in July 2026, and every single one of them is already live, not proposed, not coming soon, live. One of them can make your monthly deposit disappear if you don't act before a switch gets flipped. One of them can put $12,000 back in a married couple's pocket at tax time, and almost nobody is claiming the full amount because they're doing the paperwork wrong. And one of them puts a hard legal ceiling on what you will ever pay for your prescriptions in a calendar year, a ceiling that didn't exist even 2 years ago. I'm not going to give you headlines today. Headlines don't put money in your account. The specific form does, the specific phone number does, the specific box you check on your tax return does. So that's what today is. 3 changes, 3 exact moves, no fluff. This channel explains government benefit updates using publicly available information. Before we start, if this channel is useful to you, hit subscribe now, because I put out one of these breakdowns every day, and the whole point only works if the right people actually see it before the deadline, not after. Here's exactly where we're going, so you can jump to what matters most to you. Though I'd sit through all 3 because the one you assume doesn't apply to you is usually the one that does. Change 1, your Social Security delivery method. If you're still on paper, this is the one with a clock on it. Change to a federal tax deduction worth up to $6,000 a person, $12,000 for a couple, that most preparers still don't ask about correctly. Change 3, a hard dollar cap on what you pay for Part D prescriptions in 2026, and the free program that can push your cost towards zero even faster. Your deposit, your refund, your prescriptions. Let's go in order. Quick honest answer before we dig in, because you're probably wondering it. These changes don't come with a letter that says read this, it's important. They arrive as a line in a Federal Register notice, a press release time stamped on a government website nobody checks, or a threshold buried on page 40 of a benefits guide. Nobody is assigned to call you and confirm you claimed your deduction. The system assumes you'll find it. When you don't, the money just doesn't move. That's not a conspiracy. It's just how large bureaucracies work. The fix is the same as it's always been, knowing before the deadline instead of after. Here's where we start, because this one has the shortest fuse. Executive Order 14,247, signed in March 2025, ordered federal agencies to stop mailing paper checks and move everyone to electronic payment. September 30th, 2025 was the original cutoff date. The Social Security Administration has confirmed. It is now finishing that transition through the rest of 2026, meaning if you are one of the small number of people still getting a mailed check, the runway left is shorter than it was 6 months ago, not longer. Who this touches? If your benefit already lands by direct deposit, you can exhale. Nothing about this changes for you. If you're still on paper, here's the part that should get your attention. Paper checks are far more likely to be lost, altered, or stolen out of a mailbox than an electronic deposit ever is. This isn't the government being difficult, it's the government closing the exact door that criminals use to steal a widow's rent money out of. A mailbox in broad daylight. I've watched a client spend 6 weeks proving to a bank that a stolen, forged check wasn't hers to replace, while her actual bills kept coming. Electronic payment ends that specific nightmare completely. Your 2 options, explained simply. 1. Direct deposit. The money lands straight in your checking or savings account. Set it up through your bank or online through your My Social Security account at essa.gov. 2. Direct Express card. A prepaid debit card the government loads automatically every month, built specifically for people without a traditional bank account. No bank required, no credit check, no minimum balance, exact steps, no vague advice. 2. Set up direct deposit yourself. Log into or create a My Social Security account at essa.gov or call the SA at 1-800-772-1213 or ask your bank to help. They do this constantly, and it takes minutes to enroll in Direct Express or check your electronic payment options at once. Go direct.gov or call 1-877-874-6347. If your situation is genuinely extreme, no banking access at all, or another documented hardship, you can request a waiver through the same number, 1-877-874-6347. But I want to be straight with you, that waiver is for rare cases, not a way to keep a paper check because you're used to it. The one thing you should not do: wait and hope the check keeps coming. It's not a threat, it's just math. The paper option is closing, and the smart move is switching on a calm Tuesday, not after a payment goes missing. That first one protects money you're already owed. This next one is different. It's about money the IRS is holding for you right now that you may never have heard exists. Buried in the 2025 tax law, the one you've probably heard called the One Big Beautiful Bill is a brand new deduction built specifically for people 65 and older. It's called the Enhanced Deduction for Seniors, and it's worth up to $6,000 per qualifying person or $12,000 for a married couple if both spouses are 65 or older. Here's the sentence I want you to actually hear. This is on top of your regular standard deduction, and it's on top of the extra standard deduction people 65 plus already got. You are not choosing between them. You stack all of them, real numbers, so this isn't abstract. Picture a married couple, both 66, living on Social Security and a modest pension, combined income well under the limit. Both qualify. That's two $6,000 deductions, $12,000 of income the IRS simply never taxes. Depending on their bracket, that's often over $1,000 back in their pocket, sometimes. Close to $1,500 the difference between owing the IRS and owing nothing. Now picture a single retiree, 70, modest retirement account withdrawals, comfortably under the limit. She gets the full $6,000, no itemizing, no receipts, no accountant required. Here's what makes it easy. This is an above-the-line deduction. You do not need to itemize. You take your normal standard deduction the way you already do, and this stacks right on top of it, on Schedule 1A, a form the IRS created specifically for this provision, the income cutoff, and this is where people get it wrong. The full $6,000 or $12,000 combined is available if your modified adjusted gross income is under $75,000 single or $150,000 married filing jointly. Above that, it doesn't vanish all at once. It phases out at 6 cents for every dollar over the threshold, and it's fully gone once you hit $175,000 single or $250,000 joint. That phase-out math matters because the income counted here isn't just your Social Security. It's IRA and 401k withdrawals, interest, dividends, capital gains, everything that shows up on your return. A single large IRA withdrawal or a big Roth conversion in 1 year can quietly push you over the line and shrink a deduction. You were counting on, if you're near that threshold, spreading a large withdrawal across 2 tax years instead of taking it all in December can be the difference between the full $6,000 and a partial one. One filing status trap. If you're married, you generally must file jointly to claim this. File separately and you're shut out, no exceptions. Your action, filing your own return. Make sure your software has your correct birth date entered. Most will apply it automatically on Schedule 1A, but only if you don't skip past the age question using a preparer. Say the words, "I'm 65 or older." Make sure you're applying the enhanced senior deduction on Schedule 1A. I'd rather you sound repetitive than leave it on the table. Already filed and think you missed it? This deduction runs for tax years 2025 through 2028. You can go back with Form 1040X and amend a return you already filed. That is real money the IRS will send you for a year that's already closed. The only cost is filling out the form. Your deposit is protected, your refund is bigger. Now let's talk about the one that matters most if you're managing a real illness, because this is the one that used to have no ceiling at all. For years, the cruelest part of Medicare Part D was this. If your medication was expensive, there was no real stopping point. A serious diagnosis could mean paying and paying, year after year, for as long as you needed the drug. That is no longer true. Because of the Inflation Reduction Act's redesign of Part D, there is now a hard annual out-of-pocket cap on covered prescription drugs. It was $2,000 in 2025. For 2026, adjusted for inflation, the cap is $2,100. What that means in plain terms, once your out-of-pocket spending on covered Part D drugs hits $2,100 this year, you are done. Your plan pays 100% of your covered medication costs for the rest of the calendar year, not a reduced share, all of it. What counts toward that $2,100 and what doesn't? Counts. Your deductible capped at $615 max in 2026, your copays, your coinsurance, every dollar you actually hand the pharmacy for a covered drug does not count. Your monthly premium that keeps going regardless. If you're on a specialty medication running several $100s a fill, You could hit that $2,100 ceiling as early as spring, and from that point through December, every covered prescription costs you nothing at the counter. There's also a Medicare prescription payment plan now, which lets you spread that $2,100 across monthly installments instead of paying it all up front. Worth asking your plan about if a big bill early in the year would strain your budget. The action that multiplies this benefit: extra help. If your income is limited, there's a federal program through Social Security called Extra Help, also called the Low-Income Subsidy, that can lower your Part D premium, deductible, and copays on top of the $2,100 cap. A huge number of eligible seniors never apply because they assume they make too much. Don't assume the income. And asset limits are more generous than most people expect, and the only way to know for certain is to apply and let Social Security run the actual numbers. Apply online at essa.gov or by calling Social Security directly, using for MESSA 1020. It costs nothing to apply, and if you qualify, it can stack directly on top of the $2,100 cap to make your medications close to free. Let's bring it home, so none of this slips away the moment this video ends. Change 1. Paper Social Security checks are being phased out now. If you or someone you love still gets one, switch to direct deposit or the Direct Express card at godirect.gov or 1-877-874-6347 before the option disappears. Change 2. The $6,000 or $12,000 combined senior deduction is real. It's tax on your standard deduction, and it's claimed on Schedule 1A. If you already filed and missed it, amend with Form 1040X. Change 3. Your Part D drugs are capped at $2,100 out of pocket for 2026. If money is tight, apply for extra help through Social Security. It's free to check, and it's tax on top of the cap. Your deposit, your refund, your prescriptions, all three are sitting there right now, waiting for the people who take the next step instead of the people who just nod along. Quick note: this is general education, not legal, tax, or financial advice for your specific situation. Confirm your numbers with Social Security, the IRS, or a licensed advisor before you act on any of it. But don't let that stop you from making the call today. If this helped, send it to one person over 65. There's a real chance nobody has told them any of this yet, and subscribe, because I break one of these down every single week, and the whole point is making sure you hear it before the deadline, not after.